Good afternoon, everybody. Today, the Board of Advanced Studies and Research of the Institute of Cost Accountants of India has arranged a webinar on the strategic role of CMAs in financial modeling, driving business insights and value creation. And in this program, today we have CMA Vikash Verma sir as our speaker. Before starting the session, we would like to have a very brief introduction of sir. CMA Vikash Verma sir has also a CPA, AICPA US and IFRS diploma holder from ACCA UK. He has overall 25 years of experience, mostly in corporate and in the last few years associated with multiple institutes in academic career. He has worked with Deloitte, American Express, Accenture, Genpact, World Technologies. His last employment engagement was with Deloitte as Director in Risk Advisory till year 2024. He has supported finance and accounting operations of multiple third-party MNCs, rich experience and expertise in multiple industries like banking and financial services, telecom, pharma, retail, logistics, oil and natural gas, media, software, heavy metals, and waste management, to name a few. Welcome to you, sir, in today's program, and thank you for giving us this opportunity and having a time for us. And I think without wasting time, we should start the session. Over to you, sir. Thank you.
Thank you, ma'am. Thanks a lot. Good evening, everyone, and a warm welcome to the webinar. First of all, a big thanks to my esteemed institute for organizing this very important webinar on strategic role of CMAs in financial modeling. So thanks for that. Through this webinar, we will share how CMAs participate in key initiatives like financial modeling, what all roles and responsibilities are entrusted on CMAs, number of real world scenarios. So we'll talk about MNC examples, illustrations, wherein these are not hypothetical examples. Okay, so all real world scenarios from well-known MNCs will be shared. This will instill confidence in CMAs, especially junior and mid-level CMAs, and will also share insights for the participants who want to pursue diploma on financial modeling and valuation. Towards the end, I'll touch base on diploma in financial modeling and valuation. So let's talk about the strategic role of CMAs in financial modeling, driving business insights and value creation. So when we talk about financial modeling, what exactly do we need to know what is the role of the CMAs? Yeah. Okay, so when we talk about financial modelings, why do we think that CMAs have a specific skill as far as the financial modeling is concerned? So they have a unique blend of financial expertise, because if we look at our intermediate course and final courses, we have studied the management accounting, we have studied cost accounting, we have studied advanced financial accounting. Okay. So as far as the three branches are concerned, we have expertise in all the three branches. We have strategic insights and analytical skills. So it's a complete package from a corporate perspective, and which is a requirement for effective financial modeling. Okay. Now, what is the financial modeling is essential for making informed business decisions, assessing financial performance, how good, bad, ugly the business is performing. There are so many structured and unstructured decisions that the corporate has to take day in, day out, and predicting the future outcomes. Okay. As far as the CMA's role is concerned, they play a critical role in the development and interpretation of financial models to support the business strategies and decision making. Okay, so that's on financial modeling. Now, when we say financial modeling, what all does it encompass? Okay. So financial modeling involves a creation of a mathematical model that represents financial performance of a business or project or department. So it can be at a level of a project, at a level of a business, at a level of a department, at a level of multiple departments coming together working on a particular assignment, no matter whether it's expansion or some changes and things like that. Okay. It involves summarizing a company's historical financial data. When we talk about the financial statements, we are typically talking about the three financial statements, namely the balance sheet, the income statement, and the cash flows. Okay. So the historical financial data to forecast its future financial outcome based on various assumptions and scenarios. So when we predict the outcome, when we predict the future of any business, we need to have certain assumptions in mind, like economy is going in this direction, this is much, this is how much the economy is going to grow, this will be the level of inflation, this is the political scenario and things like that. Okay, so there will be various assumptions and also need to ascertain what kind of relevant scenarios are there, which and need to account for such scenarios. Financial modeling used for budgeting, forecasting. So when you do a comprehensive budgeting exercise, which is a year long, 6 to 7 months long budgeting extensive exercise, that's where financial modeling is used, wherein you use the historical data and do the predictions. Okay. And once you are done with the budgeting, when you start doing your forecasting, in forecasting also the financial modeling is leveraged. And the valuation. When we talk about the valuation, we are talking about the mergers and acquisitions. When you do merger and acquisition, you need to understand that there is a detailed due diligence exercise for which financial models are used to ascertain the value of the business. Okay. Models typically include projections on revenue, expenses, cash flows, and other key financial metrics. How my CAGR is showing, how my costs are trending, how my revenue are trending in the past years, how my different level of costs have changed in past years, and things like that. Okay. Now, key aspects of financial modeling. Uh, Financial models are used to estimate future cash flows, assess the viability of investments, evaluate business performance, and support strategic decision making. They help executives understand uh, how different decisions might impact the company's financial health and profitability. A typical financial model includes key financial statements such as income statement, the balance sheet, and cash flow statement. That's what we said. Although if we talk about the complete set of financial statements, it will also include change in equity and also the notes. Okay. Whereas when we talk about the financial models, we typically use these three financial statements. Okay. These are interconnected and provide a comprehensive view of the company's financial situation. Okay. Moving on. So when we talk about financial models, typically we talk about three key types of models. One is your three statement model, wherein we, as I said, we typically use the three financial statements, which is your income statement, your balance sheet, and cash flow statement. This will provide a holistic view of the financial performance. Then the second one is the DCF or discounted cash flows, because future is uncertain and we need to discount whatever cash flows we are estimating based on some discount rate. Okay, it can be capital rate. There are different ways of calculating how do we discount these future cash flows. Okay. And then budget financial model used for planning and analyzing a company's annual budget and the financial forecast. So these are the different types of financial models. Okay. Now application of models, financial models is widely utilized in various contexts, including investment analysis. So when we invest in certain projects, we do a detailed exercise of um, investments. Then only those capital expenditures are approved. Okay, so the investment analysis, whether it will be beneficial for the company to invest in such projects, corporate finance, mergers and acquisitions, and we'll touch base on each aspects in detail, and project finance. So these are the utilization of financial models. It aids in evaluating potential investments, undertaking market dynamics, and making informative decisions on budgeting decisions. Overall, financial modeling serves as a crucial tool for businesses to analyze their past and predict future outcomes. Okay, enabling data-driven decision making in an ever-changing economic landscape. Okay. Okay. Moving on. Now, we need to understand how CMAs contribute to the financial modeling. Okay, that's where our real interest area is. How, as a CMA, I contribute to the overall effectiveness of the financial modeling. What are the different areas wherein I'll contribute effectively. Okay, so we'll start with the very basic. Now, when it comes to very basic, we are talking about the data gathering and analysis part. Okay, so CMAs gather relevant. When we say relevant, whatever decision we have to make, we need to make sure that we are gathering the right information, the right data points, which will be relevant for that particular project decision making. Okay, so relevant financial and non-financial data. Bear in mind, we are not just talking about the financial data, but we are also talking about the non-financial data. When we talk about the non-financial data, we are talking about the market trends, we are talking about the customer behavior, we are talking about the industry relationship, we are talking about different elements which are non-financial but are very relevant in terms of taking those decisions. Okay. When we talk about financial data, obviously we are talking about the historical financial statements, the budgets, the forecast, and the performance metrics, how the company is performing in terms of its revenues, in terms of its effectiveness, in terms of quality, in terms of timeliness, and things like that. Okay, there are so many different metrics that shows the overall effectiveness and timeliness, efficiencies of any organization. Okay. So CMAs utilize various data collection methods to gather relevant information from multiple sources, ensuring that the data is comprehensive and accurate. And why do we engage CMAs for this comprehensive and accurate data gathering exercise? Because from a CMA perspective, first of all, we need that expertise. If we talk about the ethics, we have studied business law and ethics in intermediate. From a comprehensive view of accounting, we have studied financial accounting, we have studied cost accounting, we have studied management accounting, we have studied financial management, we have studied operational and strategic management. So from all the different um, subjects that we have studied in detail, we have very good understanding, no matter we have enough experience or not, but we have visibility on how things move or how things work in these organizations. Okay, so CMS definitely play a critical role as far as this data gathering and analysis is concerned. Now we'll take um, a very relevant example that will instill confidence in you that yes, as CMA, we play a critical role as far as the data gathering and analysis is concerned. Okay. So we'll talk about PNG. Okay. And when we talk about PNG, and as I said earlier, these are not few examples which are not relevant or I'll not say hypothetical, I'll say are not real. Okay, but These are all real examples. Why I'm saying this? Because I've worked in a few of these companies. My colleagues have worked in these companies, and we share all these facts that how we deploy different skill sets in our companies, in our different roles and responsibilities. Okay, so I'll quote example of PNG. If we look at the revenue is sheer, $84 billion. It's a big company. Market cap, I'm not sure what is the current market cap, but it's around $400 billion. Okay, you can check it. If we look at the products, it's Olay, Oral-B, H&S, Gillette, Tide, Ariel. These are all big products who capture a lot of market. Okay, so this is a big company. Now let's look at what is the role of CMAs in such a big organization. Okay, so the company relies on CMAs to construct financial models that support its strategic initiatives. One, it starts with the data collection. So CMAs at PNG gather extensive data. Just look at the humongous big data. They collect the extensive data from various departments, including sales, marketing, supply chain, finance, and production, and stores. There are so many other areas from which data is collected. They analyze sales data to identify trends in the consumer preferences and purchasing behavior. So one important initial task is data collection. It's very important that you choose the right data, which is very relevant for the exercise that you have to accomplish. Okay? Once the data is collected, the data analysis kicks in. Now, in data analysis, using advanced data analytics techniques, it's not just about Excel, and we'll touch base on these aspects, what all data analytics tools are used. But it's very important that we use advanced data analytics techniques. CMAs perform, and these techniques are used by all these CMAs. They perform predictive analytics to forecast future sales based on historical trends. Okay? So whatever data is available, and since these are mature companies, they have big data available for past 10, 15, 20 years. So you can do extensive exercise from the past trends. Okay, so based on historical trend, for instance, they might analyze the seasonal sales pattern to optimize inventory levels for specific products. So there are hundreds of products. As I mentioned, these are the key products. But if you look at the laundry list of all these different products produced by P&G, it's a long list. Okay, so sales pattern to optimize the inventory levels of for specific products. Okay, where do you need to focus? Okay. And then depending on the rationing also, like my raw material has CA rationing, or my machine capacity has a rationing, you calculate the contribution based on that lever. Okay. Model construction based on the gathered data, CMS create robust financial models that evaluates the potential impact of the new product launches or marketing campaigns. Now, it's not an easy task to simply do a meeting and launch a product. There is a lot of maths behind product launches. So there is a lot of exercise which goes behind. CMAs are involved in new product launches or marketing campaigns. Okay, how do we ensure that this marketing campaign is effective and things like that? So these models helps P&G assess the financial viability of initiatives before implementation. So once the data collection is done, analysis is done, and the model construction is done, then once you have a model in place, then you need to do multiple scenario analysis. What if my sales dip by, let's say, 3%? What if my cost increased by 2%? What if one of the market is not going as per the trend? What if there is some political instability and things like that? Okay, so there are a lot of different scenarios which are tested on these models. So CMAs conduct these scenario analysis to understand how different market conditions could affect P&G's financial performance. For example, they might simulate the impact of a price increase on sales volume and overall revenue. Okay, so that's on scenario analysis. And Believe me, these scenario analyses are very extensive. Hundreds of scenarios are tested on those models. Okay, it's not easy. You just can't launch a product until unless you do a detailed scenario analysis. Okay, and this is done by CMAs. Okay. Through these processes, CMAs at P&G not only support internal decision making, but also enhance the company's ability to respond to market changes effectively. Their expertise in data gathering and analysis enables P&G to maintain its competitive edge in the consumer goods industry. I hope this would have built a confidence in you that being CMA or someone who any of the participant who want to engage and become CMA or do diploma on financial modeling and valuation, this is how it will help you. Okay. Now let's look at model design. So CMAs contribute significantly to financial modeling by designing models that reflect a business's structure, strategy, and industry specific factors. Okay. This involves a deep understanding of the company's operations, market dynamics, and financial principles. So it's not just about the company, it's about the industry, it's about the economy, it's about the political scenario. There are so many factors that get into that has to be considered. Okay. Now we'll take another example of Coca-Cola. Okay. And again, I will reiterate, these are real world examples. Okay. Coca-Cola, we all know, revenue $47 billion, might be more. Market cap $300 billion. So just look at the sheer size of such MNCs. Now, the first thing in model design is understanding business structure. CMAs analyze why I'll keep on analyzing the role of CMAs. Okay, so CMAs analyze Coca-Cola's organizational structure, and when we say organizational structure, it's not about 50 odd people in sitting in one catering to North India, for example. Okay, these are global organizational structures. Okay, so North America has a different organizational structure, Asia has a different organizational structure, EMEA has a different organizational structure, and things like that. Okay, so they analyze Coca-Cola's organizational structure, including its various product lines, distribution channels, and geographic markets. Each product line, distribution channel, and geographic markets is this when they come together becomes very, very complex. Okay, so this complexity can be addressed by a CMA. This understanding helps in creating models that accurately reflect the company's operational dynamics. Okay, how we are operating across different geographical markets through different distribution channels, what are the different product lines and things like that. Okay. Then incorporating strategic goals. Coca-Cola has a specific strategic initiatives such as expanding its product portfolio to include healthier options. Now, with investors being very, I'll say, are keen on understanding what are the company's strategies, how they are giving it back to the society. Companies like Coca-Cola are now more focused on healthier options. Okay, so their portfolio now have to include some healthier options as well. Okay, so CMAs design financial models that incorporate these strategic goals, allowing for projections on how new products might impact revenue and profitability. Okay. Industry specific factors. The beverage industry is influenced by, now these are few industry specific factors. Now, since we are talking about Coca-Cola, this is a beverage industry which is influenced by, this is factory industry specific. So factors such as consumer preferences, regulatory changes, economic conditions. Okay. So since these are different factors by which this industry is influenced, CMAs gather data on these industry specific factors to ensure that the financial models account for potential risks and opportunities. Okay. Now, once three things are done, then moving on to the fourth step, scenario analysis. Again, as we discussed earlier, scenario analysis will be extensive exercise. CMAs at Coca-Cola create models that allow for scenario analysis. Once the model is done, you will have hundreds of scenario to be tested on that particular model, evaluating different market conditions, for example, economic downturns, shift in consumer preferences, to assess their impact on sales and profitability. This helps the company prepare for various potential outcomes. Performance metrics, financial models designed by CMAs include key performance indicators relevant to Coca-Cola's business, such as sales volume growth, market share, COGS. These metrics are essential for tracking performance against strategic objectives. Okay, so how my COGS are is moving, how my sales volume growth is happening, what is my market share, how my competitors are trending uh, on the similar products. By designing comprehensive financial models that reflect Coca-Cola's unique business structure and strategic initiatives, while considering industry-specific factors, CMAs enable the company to make informed decisions that drive growth and maintain its competitive advantage in the beverage market. Okay, so that's on model design. So we discussed two MNCs who deploy CMAs effectively in their strategic engagements. Okay. Now, third one is scenario analysis. CMAs incorporate various scenarios. And when we talk about the scenario analysis, don't consider this to be a ready-made scenarios list. You need to think wisely on what different scenarios will be relevant in the current situation. Okay. So this is again a different, very extensive exercise wherein you will deploy different scenarios which are relevant for that specific decision making to help business evaluate different outcomes based on different assumptions. This process is crucial for strategic decision making, especially in dynamic global market environments. Okay. Now, this one I can vouch myself as I have worked for GE, General Electric. Identify key variables. My team used to identify what are the different key variables. So CMAs at GE begin to identify key variables that could impact the company's performance, such as changes in interest rates, commodity prices, regulatory shifts, and market demand for their products. Okay, so if you look at GE, it has got so many products, and the team used to identify what are the relevant key variables. Okay, so that was the first step. Once this was done, then developing scenarios, they create multiple scenarios to assess potential outcomes. For instance, GE may analyze best case, base case for any specific scenario. You need to have all these three different level of scenarios. What is your best case? What is your worst case? And what is your base case? Okay, so best case scenario, a robust economic recovery leading to increased demand for industrial equipment. When we talk about this, you need to build few scenarios which are in line with your best case scenarios. Okay, then base case scenarios, moderate growth with the stable demand and cost. And then worst case scenario, if the situation or the things start going south, what will happen? The economic downturn resulting in decreased demand and increased operational costs. Okay. Impact assessment, CMAs model the financial implications of each scenario using historical data and market research. This includes projecting revenues, expenses, and cash flows under each scenario. Okay. Now, once these three steps were done, then decision support. The insights gained from scenario analysis help GE's management make informed decisions regarding investments, resource allocation, and risk management. For example, if the worst case scenario indicates significant losses, management might decide to adjust production levels or explore cost cutting measures. Then the management will not um, decide to spend too much of capex on such project during that particular time, wherein the things doesn't go well. Okay, so how do you switch from these situations which are worst case to a reasonable situation wherein the other products can still be beneficial for the company. Okay. Continuous monitoring, it's very important, and CMS play a again critical role in continuous monitoring. Okay. So CMAs also emphasize the importance of continuously monitoring external factors and updating scenarios as new information becomes available. This adaptability ensures that GE can respond proactively to changing market conditions. So it's very important for any project to have a continuous monitoring. By incorporating various scenarios into their financial models, CMAs at General Electric provide valuable insights that guide strategic planning and risk management, ultimately helping the company navigate uncertainties and achieve its business objectives. Okay, so we discussed Coca-Cola, we discussed P&G, we discussed GE in different roles, and now understand how important CMAs play a key role in these big MNCs. Okay. Strategic decision support. The fourth one is strategic decision support. CMAs provide insights from the models to guide strategic decisions, investment choices, and risk management. CMAs analyze financial and operational performance using data to help businesses thrive. Their insights are essential for both long-term strategies and daily decisions. CMAs plays a crucial role in spotting potential risk early and setting up measures to reduce their impact. Since CMAs have the expertise, they can spot these potential risks in the very early stage so that before we take our wrong decisions, we are able to mitigate those risks or take necessary steps. Okay. Data analysis. CMAs gather and analyze financial data to make informed decisions. Risk management, they assess and analyze financial risks, presenting findings to senior management. Budgeting and forecasting, CMAs set, track and maintain budgets while also using financial insights to make strategic business decisions. They're skilled in strategic planning and forecasting, which helps them to see chances for growth and predict market trend. So budgeting and forecasting exercise is one, but at the same time, when you do budgeting and forecasting, how do you study your budgeted numbers? How do you study your forecasted numbers? What are the different steps you take based on the budgets and forecast is something which CMAs are well equipped with. So they are way ahead of um, others in finance and accounts. Okay. Investment decisions, CMAs identify opportunities for financial investments that would be beneficial to a company and set long-term financial goals based on risk assessment, financial opportunities, and relevant data. Okay, so that's on investment decisions. Then financial reporting. They prepare financial reports. As I said, we have expertise in advanced financial accounting. That's why we are able to do a financial reporting. We also have a subject on financial reporting. So they prepare financial reports, including profit loss, balance sheet, and cash flow statements. Performance management, CMAs promote accountability, increase efficiency, and maximize organizational performance through performance management and variance analysis. So once this exercise is done, budgeting, forecasting, you also do a detailed variance analysis, do a deep dive session with the relevant stakeholders on why there is a significant variance in those parameters, and do take remedial action so that these various variances are addressed on a timely basis. Okay. Here is how CMAs contribute to this process in Apple. Okay. Now this is the fourth example, and again I'll reiterate that CMAs play a critical role, and why I'm choosing these big MNCs so that this will instill a big confidence in you that yes, CMAs play a critical role. in these big organizations. Okay, analyzing market trends, CMAs at Apple analyze market trends and financial data to make strategic business decisions. Okay, investment decisions, they identify opportunities for financial investments and set long-term financial goals based on risk assessment and relevant data. For example, CMAs would analyze the potential profitability of investing in a new technology or expanding into a new market. At times, certified management accountant and cost and management accountant are used interchangeably. But let me tell you, when we talk about cost and management accountant, we are talking about a notch from a skill set perspective, a notch above the certified management accountant, because we are talking about expertise in cost accounting. We are also talking about the expertise in financial accounting. So from the complete accounting perspective, financial, cost and management, we have expertise in all the three areas. Okay. So risk assessment, CMAs assess financial risk associated with new ventures and product development. They present these findings to senior management, helping them make informed decisions about which projects to pursue. Okay. So there's risk assessment, budget management. They also set and maintain budgets, ensuring that resources are allocated efficiently. Through clear insights, CMAs at Apple streamline operations, boost financial performance, and enable decisions rooted in strong data analysis, laying a solid foundation for success. Okay, so that's how it's so important. I've given you 4 examples. Uh, uh, Multi-billion companies with multi-billion dollar revenue, um, and that definitely should help. Okay. Accounting, CMA skill set in financial modeling. Accounting proficiency in accounting is a foundational skill, enabling CMAs to identify discrepancies and make necessary adjustments. Forecasting, CMAs make predictions based on gathered data, factoring in historical and present data, and qualitative aspects like management and culture. Analytical skills, CMAs analyze large volumes of data to derive meaningful insights, connecting uh, financial statements. CMAs must process and connect financial statements, including the balance sheet, income statement, and the cash flow statement. Strategic thinking. Strategic thinking enables CMAs to make better predictions using financial data. Risk management. A significant part of CMA's job is identifying and managing risk. They must critically assess the financial impact of new regulations or the potential cost of entering a new market. Okay. Budgeting and forecasting skills. Becoming a CMA will teach individuals how to create and manage budgets that align with the organizational goals and objectives. Okay. So just look at the skill set. Now, if we look at the tools and technologies used by CMAs, Excel and advanced spreadsheet tools. And I'll touch base on the diploma on financial modeling and valuation. That's where you'll have visibility insights on all these aspects. Okay, so Excel and advanced spreadsheet tools. CMAs leverage Microsoft Excel for financial modeling, data analysis, and scenario planning. Advanced functions such as VB, scripting, Power Query enable them to automate repetitive tasks. So you don't have to spend tasks that can be automated, repetitive tasks which can be automated. So being an expert in VBA and Power Query, you can write a query that will automate such repetitive manual tasks so that you can focus on decision making and judgmental kind of role. Enterprise resource planning, ERPs such as SAP, Oracle is crucial for CMAs. These systems integrate various business functions, allowing CMAs to manage and analyze financial data efficiency while improving overall operational efficiency. Okay. Data analytics tools, proficiency in data analytics. Tools such as Python and SQL is increasingly important for CMAs. These tools help analyze massive data sets, identify patterns, and support data-driven decision making. Business intelligence software, CMAs utilize BI to create interactive dashboards and visualizations. transforming complex data into actionable insights that support strategic decisions. Tools like BI and Tableau are used for these interactive dashboards. Okay. So this is on tools and technologies. We have additional tools and technologies which are like cloud-based accounting software. So cloud solutions facilitate real-time access to financial information, enhancing collaboration among teams and allowing for flexibility in the decision making from any location. Okay, so that's how we need to learn these cloud-based accounting software, AI and machine learning. Uh, it is um, becoming reality very fast, and AI technologies assist CMAs in predictive modeling, automating routine tasks, and providing deeper insights into the customer preferences and market trends. From a blockchain technology perspective, although it's still emerging, but we also need to understand that this will play a key role in coming time. Advanced techniques such as the Monte Carlo simulations, the predictive analytics is also very important when it comes to advanced analytics. Okay. Cybersecurity tools. As financial data becomes increasingly digital, knowledge of cybersecurity principles is essential for protecting sensitive information from breaches. Okay. So this is on tools and technologies. Now, from a management accounting technique perspective, in-depth knowledge of management accounting techniques, including cost analysis, variance analysis, performance measurement, financial analysis. CMAs possess enhanced expertise in areas of accounting and finance with acumen in strategic thinking and business analysis. Ethical standards. CMAs adhere to ethical standards, promoting transparency and accountability. As I said, in intermediate, we study the business law and ethics. Tech and analytics, skill in technology and data analytics are crucial for modern CMAs communication. It's very important that we articulate our communications very well, must have strong communication and leadership skills. Okay. So problem solving, being solution oriented, is another important skill. CMAs should think logically and organize their thoughts while finding solution to problems. Okay. Okay, how CMAs drive business insights through financial modeling. Let's touch base on performance monitoring. The CMAs use financial models to track key performance indicators, KPIs. Different industries, different companies have different KPIs to monitor their performance and operational efficiencies. Okay. Forecasting and budgeting. Forecasting future financial performance helps business prepare for growth challenges and changes in the market conditions. And then cost-effective decisions. By analyzing various cost structures and scenarios, CMAs can advise on the way to reduce cost and maximize profitability. Okay. Now, investment decisions. CMAs create financial models to evaluate investment opportunities, determine their potential for growth and return. Business valuation. CMAs assess the value of a business or project, assists in mergers, acquisitions, and other strategic decisions. Scenario planning. CMAs help businesses simulate different financial outcomes based on the strategic changes. For example, market entry, the cost cutting measures, etc. Okay. Risk mitigation. By modeling various risk factors, CMAs help businesses identify vulnerabilities and plan for uncertainty. Okay. Okay. And these are practical examples. In M&A, CMAs build financial models to assess the viability and financial impact of mergers or acquisitions. So there are two ways in which CMAs play a critical role during the due diligence and post the integration happens. Then also they play a key role in post integration exercise. So cost benefit analysis. CMAs use model to compare the potential cost and benefits of different products, projects or investments. Okay. A cash flow management. CMAs create cash flow models to ensure a business has sufficient liquidity to meet its obligations. Strategic planning. CMAs help businesses align their financial strategies with overall corporate goals, improving long-term performance. So these are the other areas: M&A, cost benefit analysis, the cash flow management, and the strategic planning. Now let's touch base on merger and acquisition. CMAs build financial models to assess the viability and financial impact of merger and acquisitions. Their expertise in financial analysis, risk assessment, and strategy planning is essential in guiding organizations through these complex transactions. Okay. Now, if we look at the financial modeling, CMAs create detailed financial models that project the future performance of a merged entity or acquired company. These models typically include revenue projections, estimating future sales based on market analysis and historical performance. It will also include the cost structure, analyzing fixed and variable cost, and also include the semi-variable cost to understand the financial implications of the mergers or acquisitions. Cash flow analysis, evaluating cash flow and outflows to determine the liquidity position post transaction. So post the merger or the acquisition, what will be the liquidity position? The valuation assessment, CMAs utilize various valuation technologies to determine the fair market value of the target company. And this include your DCFs, discounted cash flows, projecting future cash flows and discounting them back to the present value. Okay. Comparable company analysis, assessing similar companies in the industry to gauge valuation multiples. Risk assessment, CMAs conduct thorough risk assessments to identify potential financial, operational, and strategic risks associated with the transaction. And this involves analyzing market trends and competitive landscapes, evaluating the target companies. When we say target company, we are talking about the company that we are going to merge with or take over. Okay, so evaluating the target company's financial stability and the operational efficiency, whether this merger will be beneficial for the organization or not. Due diligence, CMAs lead financial due diligence efforts, scrutinizing the target company's financial statements, how good, bad, ugly their tax compliance is, and what are their different internal controls, how strong, effective their operational processes are. This ensures that the potential liabilities or the risk are identified early in the M&A due diligence process. Okay. Post-merger integration, this is another important activity. So when we talk about M&A, it's not just about once the merger happens or the acquisition happens, the work is over. The real work happens in the integration. Okay, so the post-merger integration, after a merger or acquisition is completed, CMAs help in integrating the financial operations, setting performance metrics, and ensuring that synergies are realized. They monitor key performance indicators to track the success of the integration process. Okay. Let's take another example. Amazon, they have acquired Whole Foods Market in 2017. I don't know how many of you recall, but that was a very strategic decision. And if you see now, in couple of years, they launched Amazon Fresh. Okay, how they have launched Amazon Fresh? Because of this takeover. Okay, so a practical example of CMA in action can be seen in Amazon's acquisition of Whole Foods Market in 2017. Financial modeling, CMAs at Amazon built comprehensive financial models to assess how acquiring Whole Foods would impact the Amazon's overall revenue, cost structure, and cash flow. So depending on the strategy, the CMAs were engaged. They have done a comprehensive financial modeling. The next step was valuation assessment. They conducted a thorough valuation analysis to determine a fair purchase price for Whole Foods, considering its existing market position and growth potential. And believe me, this was one of the very smooth and successful acquisition in the history. Risk assessment, CMAs evaluated risk related to market competition, integration challenges, and potential regulatory scrutiny associated with such a significant acquisition. Okay. Due diligence, financial due diligence was critical in identifying any hidden liabilities within the whole food operations that could affect Amazon's financial health post acquisition. Okay. Through these efforts, excuse me, through these efforts, CMAs provided valuable insights that informed Amazon's strategic decision making during the acquisition process. ultimately contributing to a successful integration of Whole Foods into Amazon's broader business model. Okay, so this is another example where CMAs have played a very critical role. Okay, holistic approach. CMAs bring both financial expertise and strategic thinking, providing a well-rounded perspective on the financial modeling. Business acumen. CMAs understand the operational side of businesses and ensure financial models are aligned with the business realities. Adaptability. CMAs are skilled at adapting financial models to changing market conditions, ensuring models remains relevant and accurate. Okay. Now let's look at the CBA, the cost benefit analysis. CMAs use models to compare the potential cost and benefit of different projects or investment. When we look at the steps, we'll establish a framework, then we identify the cost and benefits, assign values, assign monetary units to each cost and each benefit, and then you will do a tally or a reconciliation and do a comparison and figure out whether this overall project is beneficial or not in comparison to the costs involved. Okay. So we'll quickly discuss few examples. Speeding fleet purchase decisions, or maybe we can skip it. I mean, that's how we have engaged the CMAs. Thread and Kicks website. So here the fleet purchase decision, since the new vehicle was costing $100,000 and the increased delivery capacity was $138,000, the overall impact was $38,000. That's why we decided that we'll go ahead and do a fleet purchase. Okay. Threads and Kicks website update. So there was a requirement of this is a apparel company and there was a requirement of website update because we were not getting the right kind of response from the customers. When we have done the due diligence, the estimated cost to update this website was $68,000, whereas the assessment of the forecast of revenue increase was 60,000 only. So in short run, we thought it will not be beneficial for the company to make changes to the website. Okay. City public transportation upgrade. This is another example. Cash. Now let's move on to the cash flow management. CMAs create cash flow models to ensure a business has sufficient liquidity to meet its obligations. CMAs apply cash flow management principles to ensure businesses have sufficient liquidity to meet their obligations and invest in future growth. Cash flow management involves monitoring, analyzing, and optimizing the flow of cash in and out of a business. Here are practical examples. The first one is identifying and addressing short cash situations. So if a small business has a situation where inventory is sitting for 90 days, receivable due 60 days, payables are due in 30 days, obviously the CMA would analyze and recognize that the funds are tied up in inventory and receivables while payables are due sooner. So to address this, CMA might ask the relevant team to renegotiate payment terms, speed up the realization of inventory and the collection of receivables, recommend short-term borrowings to cover the deficit if the above mentioned steps are not appropriate or efficient enough to cover the shortfall. Forecasting and monitoring, again, another example, the financial to maintain financial stability and plan for future growth. A CMA would create a cash flow forecast to project future cash inflows and outflows using historical data and market trends. Okay, so monitor cash flow regularly on a daily basis, on a weekly basis to identify patterns and trends using accounting software to automate tracking, improve receivables and payable management. Okay. Controlling operating expenses, maintaining a cash reserve. Now, strategic planning. CMAs help businesses aligning their financial strategies with overall corporate goals, improving long-term performance. They play a pivotal role in strategic planning by providing financial insights and analysis that guide our organization in setting and achieving their long-term goals. Here are some practical examples. Market expansion analysis at a consumer goods company. There are a few companies which I was not able to name them because of some certain reasons. Market research, financial projections, risk assessment, decision support. These are all taken by CMAs. Second example is the cost reduction strategy at a manufacturing firm. So cost analysis, benchmarking with the firm, with the industry, strategic recommendations, propose actionable strategies for the cost reduction, such as renegotiating supplier contracts, etc. Implementation monitoring after the strategies are implemented, CMAs track performance metrics to evaluate the effectiveness of the cost reduction initiatives. Okay. Uh, I think, okay, I'll also touch base on this improving receivable and payable management. Companies seek to improve its cash conversion cycle. So CMA would implement strategies to optimize the receivable and payables. How we are doing it? Because if we use the 210 kind of discounts which are available by supplier, it result into a big finance help. Okay, so implementing a clear credit policy to manage customer credit effectively, extending payment terms with suppliers without damaging relationships, taking advantage of early payment discounts when beneficial. So most of the time you will see these early payment discounts are beneficial and they play a major role in the overall finance of the company. Okay, even if you do a simple maths, 210, which is if you pay in 10 days, you will get a discount of 2%, result into a big number. Okay. Okay. Now, new product development at a tech company scenario. Tech company is planning to launch a new software product. CMAs conduct a feasibility study to assess the financial viability of the new product, including development costs and expected revenue streams. Budgeting, they prepare detailed budgets that outline expected expenditure throughout the product development lifecycle, performance metrics development, strategic alignment. Okay. Now, overall summary of this webinar, the strategic role of CMAs is pivotal in financial modeling. By leveraging their comprehensive expertise, businesses can create accurate, actionable models that drive informed decision making and value creation. CMAs are integral to navigating financial complexities, managing risk, and optimizing business performance. As financial environments become increasingly complex, the role of CMAs in financial modeling will continue to be crucial to business success. Okay, thanks everyone. Let me quickly share the brochure also. Hold on. Okay. Okay, so that's okay. So you can enroll on in Diploma in Financial Modeling and Valuation, DFM. The course module will have introduction to MS Excel, financial statement analysis, project finance, M&A and valuation, investment banking and equity valuation and research. We have covered all these relevant topics, which are very important for CMAs, and CMAs play a critical role in big MNCs. Okay, so bear in mind that this course is very useful for someone who is looking for career in financial modeling and valuation. Okay, eligibility is CMA members, qualified CMAs, finance CMA students, or other professional graduates, postgraduates. Okay. Uh, Live online sessions will be 100 hours, interactive live online classes with case studies and assignment. Qualifying marks is 50%. Certification on completion. Members fees is this much, 15,000 plus 18% GST. Final CMA students, it's 12,000 plus 18% GST. Other professional, it's 18,000 plus 18% GST. Online assessment 100 marks. Fees is INR 1,000 plus 18% GST. Okay, admission commences from Jan-Feb 25. Course commences from April 25. If you need any further information, please contact advanced studies at icemai.in and contact these numbers. Okay. Thanks everyone. Hope this webinar was useful for CMS. and have a nice evening. Any questions for me? See some questions. Maybe what I can do is I can pick up these questions and respond to. Please also, please also, yeah, you can drop these questions. Can someone from the team collate these questions? And maybe I can respond to these questions because we are on top of the hour, but we'll definitely respond to some of these questions. Okay. Tinku ma'am, shall we conclude?
You can answer the questions also, sir.
Actually, ma'am, I have another engagement, but
Okay.
I promise I'll definitely answer some of these questions. You can collate these questions, and then maybe few of these questions I can definitely answer. I can't even see these questions.
Questions will be in question answer tab.
PPT is still showing introduction slide only. Is it?
No.
Okay. Okay.
Is in question answer tab. Yes, the last question has come like how far the LBO model is challenging in the context of global level acquisition of businesses.
Okay. See, when we talk about these financial models, we are not talking about the merger or and acquisitions in India. We are talking about the global merger and acquisitions. When we talk about the financial modeling, as I said, different tools and technologies are used nowadays. With AI also kicking in, you will see a very complex being model being made easy. So all these technologies, different technologies, are helping building those financial models. And since CMA have inside of the business of the industry, they play a key role vetting these financial models, right? So as far as the initial stage of preparing these financial models are concerned, now the role is changing a little bit. Earlier, we used to do a detailed financial modeling on our own. Now, with the use of technologies, there is and availability of different financial ready-made models. We just build on those financial models. Okay. Okay, thank you, ma'am. Shall we conclude?
Yeah, we can conclude, sir.
Okay, thanks everyone. Thanks for your time.
Thank you, sir, for being the speaker of this session and have spare some time from your busy schedule for this session. And I hope this session is going to help our members and other stakeholders, as this session speaks about some relevant areas for today's businesses for financial professionals. And we would like to take this opportunity to thank our President, sir, CMA Bibi Nayak, sir, and our Vice President, sir, CMA TCA Prashad, sir, and our Chairman of the Board of Advanced Studies and Research, CMA P. Vinaranjan, sir, for helping us to organize these kind of sessions. We would definitely bring this kind of sessions in future also, which will be on these current topics and current trends of the business. So good night to everybody. Once again, thank you, sir, and thank you all the attendees. Thank you.